Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. This is the 4-hour chart of DXY, and as you can see that on Friday after this correction, DXY somehow tried to take some support and it's trying to go up again. As we have been discussing that overall the trend of DXY is still in uptrend, and if you're still looking for a trend reversal, then always keep in mind that we need an inverted V pattern for a trend reversal. And right now we do not have any fundamental factor also that will change the direction of the market. So as a result, consider DXY to be in uptrend only. If you see a series of red candles, also 3-4 red candles, that is also a part of correction. Okay, and plan your trades accordingly. And if we look at the chart of US government bonds, then we can see that government bond is also in uptrend again. It took support at a 50 moving average as we expected, and if bond starts going up from here, if the uptrend continues, then obviously we will see further pressure on the chart of gold. When US government bond made these candles, everybody on the chart of gold thought that there is a trend reversal on gold, but no, it was just the correction on government bonds. As a result, we saw some recovery. So overall, the pressure on gold may continue because of these ongoing factors in the market. Okay, and in case there is a sudden turning point on the Russia and Ukraine war, then the things will be different. Then we will see extreme recovery on the chart of gold. But as of now, we do not have any factor that will bring a trend reversal here. Okay, now let's jump to our gold. So gold last traded price is 1661. This is the last traded price of gold. So the market opening will be very important. Usually we do not see much movement on the chart of gold during the Monday, first half of Monday, but for the last couple of weeks things have been very different. Okay, so you must be very careful if you're holding any position right now. As you can see on the chart that market close at the previous support here. Okay, market closed at the previous support, and if I draw the Fibonacci retracement levels here, then you can see that this is also the Fibonacci 23.6% retracement level. It means that this is a level where retail traders are present. Okay, this is a level where retail traders are present and retailers are taking a buy position. But my dear friend, as I said, the market opening will be very important. So if market starts going up from here, listen to me carefully. If market starts going up from the current market price, from the present level, then the first level that market will face is 1675. Okay, the first level that market will face is 1675, and keep in mind 1675 is not a very strong level. Okay, this is not a very strong level. So if market reacts normally, that it does on usual Mondays, like not much volatility, usual Monday market. Okay, if you see normal market forming normal red green candles, then you can expect the market to face some kind of selling around 1675 level. 1675 is a level for day traders only, not for positional as well as swing traders. This is for day traders only. If you see the market is struggling near about 1675 level, being the previous high, okay, being the previous high, then you can take a sell position. But keep in mind that is subjective, because a trader needs to observe first. Do not be a gambler. Seeing level, taking a buying and selling at the levels. Okay, no. If you see that market has approached your levels. Okay, let's say you have a list of 10 points. Okay, 10 levels. Okay, you have marked. Okay, if market approaches 10 levels, you cannot trade on 10 levels. Obviously, you will have to look for the best opportunity. You will only be trading on 2 or 3 levels only. Okay, this is how a trader works. So if market reaches 1675 level, observe the market first. If you see markets struggling like the previous time, then you can take a sell position. Okay, on the other hand, if you see that market is standing at 1675 level. Okay, but still market is not showing any price rejection from above. Market looks extremely bullish. It means that though market is standing at resistance, but buyers are very strong in the market right now. Buyers do not want to surrender. They want to take the market up. Try to understand the market emotion. So if you see the market is extremely bullish at the resistance also, previous high also, don't take sell position, because just pass it. Okay, so just avoid 1675. Then you need to wait for 1681. Okay, you need to wait for 1680 81 to 1689 level. This is the whole resistance zone. In this level, okay, in this level, do not take any buy position. Okay, 1680 to 89 level, this is a big seller zone in the market, and in this level do not take any buy position, because in this level you can expect the market to reverse. Let me explain why. Because you can see in this level only, previously market has shown strong price rejection from above, and as a result we can expect the market to reverse from this level. And lastly, we also have Fibonacci 38.2% retracement level. So if we combine both the factors here, then yes, we can expect 1681, 82, 85, that particular level to act as a resistance zone in the market. Okay, and ultimately we have resistance from the 200 moving average. You can see the red line coming down. So around 1695 we can expect the market to face some resistance again from the 200 moving average. But right now these are the levels that you need to watch out for. So my dear friends, these are the levels. See, at first don't act like gambler, observe the market first and then act. Protect your hard-earned money, as I always say. So your first resistance is 1675. For day traders only, the reliability is low. The second resistance is 1680 to 89 level, big level, but sky, I can't help it, market doesn't listen to me. Okay, resistance zone, sellers are present, so you should be avoiding buy position and you should look for sell positions only. Okay, 1675, 1680 to 89. And then resistance 3. Okay, if you are looking for resistance 3, then around 1695. Okay, 1695 or 1700, because of the 200 moving average. I cannot give you the exact figure right now because that is a dynamic resistance. Okay, now let's look at the supports. First of all, if market breaks 1659, listen to me carefully, if market breaks 1659 level, this level here, okay, then you may get a small selling opportunity. Okay, below 1659 you may get a small selling opportunity. Let me explain why. Because you can see 1659 is acting or acted as a previous support for the market. Okay, 1659 acted as a previous support. So if market breaks the previous support, you may get a selling opportunity for around 40 pips, 30 to 40 pips, and your next target will be 1655. Your next target will be 1655. Why? Because you can see the the blue line, the 50 moving average, which is the dynamic support, is also present here. So I think if market breaks 1659 level, 1655 will be the next support. Okay, so not a support to take a buy position, but a level where you should exit from your sell position. And in case market breaks 1655 level, if market breaks 1655 level, okay, then you may get a good selling opportunity. Then you may get a good selling opportunity at least till 1645, I think so. Okay, 1645 will be your next level, and around 1640 level we have a support. I think that there's a high chance that market will be taking support around this level on Monday. But in case, as we all noted, for the last couple of months, Mondays are not acting like usual Mondays. So if we see any high volatile situation, and if we see market going below 1640, then you can easily take a sell position, and I think that a big sell may come below 1640. Okay, and ultimate support right now is around 1615. This is the ultimate support for the market, around 1615. Let me write down one by one so that you do not get confused. if not IG, if let me pause the video and write first, okay, so that I do not waste the time. See, this is for day traders. If market breaks 1659 and goes down, you can look for a small sale opportunity below 1659 and exit at 1655. Keep in mind, this is a high risk. So if you have a very low capital right now, you are not in a position to take any risk, you can avoid. So if market bounces from 1655, day traders can look for a risky buy. Yes, I'm still considering it a risky buy because we have 50 moving average as support, and if I take additional help from the Fibonacci, then I can see that we also have Fibonacci 50% retracement level also. If you combine both the factors, then yes, there is a chance, good chance, but still somehow I'm not getting the right vibe. Okay, so that's why I'm just saying that it can be a risky buy from at 1655. Anyways, if market breaks 1655 with volume, if you see the market is approaching 1655 with good red candle, okay, obviously it will not work because no level is permanent in the market. Always keep in mind, no level is permanent in the market. No trader is 100% accurate. Okay, so say you can go for a sell below 1655 for target of 1645. Yes, a big sell may come. Okay, at least if not 1645 directly, at least you can expect 1650. Okay, and if you're looking for a very reliable levels right now, then we have 1641 to 40 as a nice support here. If market bounces, okay, if market approaches this level, observe the market. If you see that market is forming hammer kind of a pattern, market is taking support, you can go for a buy. But in case you see the market is going down, okay, market is under the influence of sellers, obviously the level will not work. In that case, you can look for a sell as well below 1640 level. But keep in mind, right, below 1640 we do not have any immediate support, so a heavy sell may come. Okay, anyways, this is my analysis. I can be wrong as well. No trader is 100% accurate. Please follow your own risk management. Do not gamble with your hard-earned money. Bye bye, take care.